Gold remaining steady here, trading around 1281 this Thursday. So are traders reluctant to short the market ahead of this weekend's first round of French elections? Joining us today, Peter Hug, Global Trading Director for Kitco Metals. Pete, good to have you back on.
It's good to be here, Daniela.
So when can investors start to get excited for $1,300 gold again, Pete?
I'm trading this market strictly from a technical basis, and until we clear resistance levels, which right now I've got gold resistance at 1292. It's bounced off that twice. If we can get through 1292, I think, and it's got to be in short order. We have options expiries next week at the $1,300 strike. If we can get through 1292, say by Monday, I think 1300, 1303 is definitely in the cards. A lot's going to depend on how the election results, the first round of election results come out of France on Sunday. If Le Pen looks like she's going to go into the second round and the far left goes into the second round, then there might be some anxiety on the continent, and that could be the catalyst to propel gold to 1300 early next week.
Now, Pete, you've also noted that North American demand for gold remains anemic. So why are these levels not attractive here?
Well, the gold price in and of itself at the 1280 range and silver at $18, from a North American perspective, these levels here have been saturated over the past 2 years. I think investors are looking for a break. I don't think they want to get caught on the move that happened in 2015 when gold rallied, from 1,050 up almost to $1,400 and then ended up reversing $200. So I just don't think there's a lot of commitment to the market from at least a North American perspective. You get gold over 1325, I think that psychology changes. I think you get silver over $19, the psychology changes. I also think you're going to get more participation in the market if you get the reverse. If gold were to break down below 1200 and silver were to break down below 1600, I think you'd see a fresh spate of buying. But you've got to imagine since 2008 the huge quantity of physical metal that's come onto this market from both the U.S. and Canadian mints, and a lot of that metal is still sitting in investors' hands. And a lot of them are now looking at exit points to try to get out of the market, try to make a little bit of money, and then redeploy that capital into the equity market or even the bond market that's yielding 2.5% on the 10-year right now, with very little risk on the bond side. So I think they're just looking at seeing other asset classes improving without the same type of juice that used to be in the metals markets back in 2008, 2011.
Yeah. And as you suggest, we might just see volatility surfacing at the Asian Open on Sunday night. So we'll see what's in store. Peter Hug, thank you so much for your thoughts.
Yeah, you're welcome, Daniela.
And thank you for watching. We'll see you tomorrow.